Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. New floor. U.S. President Donald Trump says trading partners will face tariff rates between 15 and 50%. It comes as the European Union sees progress towards an agreement. Bumpy ride. Tesla CEO Elon Musk warns of a few rough quarters ahead as tariff costs increase and bite into demand. Second quarter revenue saw its sharpest drop in a decade. And building allies. A 150-person Saudi Arabian delegation arrives in Damascus. 44 pacts worth about $6 billion are expected to be signed. It's just gone 8 a.m. across the Emirates. I'm Johanna Bersachi in Dubai. Another positive day for global markets. MSCI Asia Pacific up another 1% overnight. That is its sixth day of gains. And more green behind me as we talk about the impact the signing of some of these trade deals between the U.S. and various counterparts in the Asia region is having on global markets. Attention obviously now turning to the EU and whether a deal can be secured before that August the 1st deadline. So this is the picture this morning. We've got S&P futures slightly up in the green, also digesting some of the tech earnings that came through yesterday. Alphabet strong, heavy on capex spending. Tesla not so much the case. The stock dipping around 4 or 5% in after hours. We'll talk more about that on the show. But this is the picture. European markets, look, we are poised for a very strong open today, leaning towards more than 1.1% higher, building on gains from yesterday. Again, more and more optimism about the possibility of a deal and a potential baseline tariff of 15% there. Also, remember, we've got ECB coming up today. No change in the rate expected, but still a lot of signals may be gleaned on how the ECB are thinking about the growth dynamics looking ahead for the rest of the year. Euro, obviously, in focus too, so we inching higher and higher. We've moved up about 1.5% just in the course of the last week on back of the weakness in the USD. So 117.70 is where we're at. And then dollar yen, look, you are seeing money pour back into the Japanese currency once again. So 146 is where we're at. It's trading about 0.3% firmer versus the USD today. But something our colleagues in the Markets Live team have been signaling is that the front end of the JGB curve, that two-year rate, has started to imply rate hikes out of the Bank of Japan. So what you may see as a reaction to the fact that the market is beginning to price in imminent rate hikes out of the Bank of Japan, or at least they're going to start preparing the market for the possibility of that happening in Q4. As for our terminal of today, I also want to point out that it's not just some of the developed markets, global equities that are performing well. It's also emerging markets. MSCI EM index up 18% this year and at levels not seen in the past 3 years. So strong all around. Okay, with that, let's check in on how markets in Asia are faring today. Avril Hong is in a Singapore studio, and I was just building up a little bit on the price action that we're seeing in dollar yen. Speak to us more broadly about what's going on today, Avril.
Yeah, I mean, it's really this trade deal optimism, right? 15% for Japan, maybe the same for the EU. And then, indeed, we are hearing how the likes of South Korea has been weighing investment pledges to the US in order to get a lower tariff rate. So it's speaking about this investor confidence that tariff levels might not be as bad as feared overall. So that risk appetite is seeping through into the rest of Asia. The gains you're seeing on the sixth session for the region's benchmark is its longest winning streak since January. Today, the Japanese equities are leading the way. The topics could be seeing a fresh record high. Worth noting that yesterday it was the auto stocks that were powering gains. Today it is the banks that are leading the charge, and against the backdrop of those BOJ rate hikes, now those bets coming back into play. Although for next week, it's still the expectation of a hawkish hold from the Japanese central bank. Joanna.
Avril, thank you so much. Avril Hong in Singapore. Well, it is earnings season, and we're getting some earnings this morning from Emirates NBD. This is back-to-back with other banks' earnings, the FAB yesterday. But what we got from Emirates NBD today is a beat. So operating income, 12.1 billion dirhams versus an estimate of 11.68 billion. Net income coming in at 6.3 billion dirhams, again higher than the estimate of 5.49 billion dirhams. Impairments coming coming in at 200 million dirhams. Cost-to-income ratio also better than the estimate at 29.7%. Net interest margin, though, slightly lower at 3.36% versus estimates of 3.55%. In terms of commentary, a few lines I want to bring in, quite interesting. They're saying that first half Dubai property transactions were higher year on year, while price growth is actually moderating. And then this line is also interesting. Lending in Saudi Arabia grew 27% year to date, with 3 further branches expected to open by year end. And in terms of other guidance, NIMs are expected to finish 2025 within the 3.3 to 3.5% guidance range. And the cost of risk guidance has been lowered to 20 to 40 basis points on strong recovery. So a beat both on top line, bottom line, and strong guidance for the second half of the year. That's from Emirates NBD, and you can see the stock is up 50% over the past 12 months. Now, back to talking about trade deals. President Trump has suggested he will not go below 15% as he sets his so-called reciprocal tariff rates ahead of an August 1 deadline.
We're going to have a very, very simple tariff for some of the countries. There's so many countries you can't negotiate deals with everyone, so we'll have a straight simple tariff of anywhere between 15 and 50%. A couple of we have 15 because we haven't been getting along with those countries too well. So we just say, let's pay 50. And that's the way it is.
For more, let's bring in senior editor John Herskovitz. It seems like listening to President Trump there, 15% is the new 10%. Is that what other countries can hope for as a best case scenario now?
Sure. As you mentioned, 15% seems to be the floor, what we're looking at for the negotiations. There are a few big deals that are still in the works. The EU is one of them. South Korea is looking for a deal, and also India. But 15% is the level that was struck with Japan. It was done specifically with Japan's auto sector in mind. The sectoral rate was 25%. For Japan, one of the biggest export components are cars and car parts to the United States. This is a key driver of its economy, and getting the tariff knocked down to 15% was big for Japan. And it seems to be the number that the U.S. is using as what it sees as the baseline, with 50% the ceiling for a threat for how high things can go.
Let's talk about some of the other elements that were included in the U.S.-Japan deal. Because yesterday, Scott Bessent was speaking to our colleague Anne-Marie Horder, and he said the reason they managed to get that 15% rate was because they offered an innovative package to them. And I wonder whether that's in reference to that $500 billion investment pledge that Japan also made. Is that going to be the template that other blocs and countries around the world are expected to follow? I.e., is the expectation now that EU will have to commit to investing, I don't know, X $100 billion into the U.S. over the coming years?
Yeah, I'm not sure if that will specifically apply to the EU, but we're seeing it with South Korea. We had some reporting today that the U.S. is looking for South Korea to set up a fund similar to what Japan pledged. I think the South Korea was $100 billion as compared to Japan's $550 billion. So that may be an element in there. Also in the Japan deal, there were pledges for purchases of U.S. products, from Boeing aircraft to more agricultural products. The devil's in the detail with some of these things. You have to see if these are actually new orders or existing orders. Yeah, with Japan, I think it was 100 Boeing aircraft, but Japan's airlines also had a number of outstanding orders with the airline maker. With the EU, I'm not sure if we're going to see that fund, but the EU it's looking at the 15%. It was hoping for 10%, and with Japan getting 15%, if the EU gets anything higher, it would make some of their goods, especially automobiles, less competitive in the U.S. market.
John, so good to have you on. Thank you so much for breaking it down for us. Obviously, expectations super high ahead of those other negotiations going on around the world. John Herskovitz. For more on how currency markets are reacting to the latest news, Paul Mackel, global head of FX research at HSBC, joins us now. Paul, Other risky assets, so you talk about global equity markets, U.S. equity markets at an all-time high. You are seeing a strong, perhaps bullish reaction to some of the trade deals that have been inked over the last couple of weeks. Not so much the case in the USD. Why is the USD not enjoying any of this risk-on rally?
Well, in some ways, it's behaving in the way that it should be. That is, when you see strong risk appetite, the behavior in the past is that actually the dollar would tend to weaken. So we're seeing some conventional behavior coming back in the currency. So this is definitely a story to be watching, that if these trade deals keep coming out and the markets are liking the news flow around it, then I wouldn't stand in front of it. It's most likely to keep testing the dollar lower.
Yeah. What about that de-dollarization trend that we spoke about a couple of months ago? Do you still see that happening? Is there sentiment from the clients that you speak to that they just want to shift away from the dollar or structurally be less involved or invested in the dollar than they have been in the past?
Well, the narrative is there, of course, but the evidence around it is not the most compelling. And I think we need to break it down into two things. First of all, there's the underlying investments in the U.S. If you think about what foreigners are doing with their U.S. equity holdings or other security holdings denominated in U.S. dollars. And the evidence around that actually suggesting that foreign appetite has remained relatively strong. But on the other hand, it still goes back to what people like myself have been thinking about the last couple of months, is that maybe you don't need to own the dollars with that. You're hedging away that currency risk. So you can still participate in the rally of U.S. markets or U.S. equities as an example, but you don't have to, as I said, take the dollar with it. You can hedge it away. And I think that that's what's been going on. These hedge ratios are showing some signs of increasing, in particular with European real money accounts.
Yeah, so interesting. So there's something structural at bay as well going on there with the hedging activity. You mentioned Europe. I see HSBC, you had a call of euro at 120. We're getting close to that. We're just shy of 118 now. What do you think could or can possibly take us above 120? Why is 120 the ceiling here?
Well, it's a really good question. And what we were arguing just a few weeks ago is that how do you get a much bigger move higher in the exchange rate, that is? And you would need to see the ingredients come into place along the lines of the Eurozone economy beginning to show some signs of life, like what had happened in the past. And when those conditions were being met, then you get this idiosyncratic story that could be developing to help support the currency beyond what we're saying with something like 120. So the top end of our fair value range in euro dollar is roughly about 130. But how do you get to that? How do you fill that gap from 120 to 130? I would like to see some signs that the Eurozone economy is doing better.
Yeah, well, maybe we'll get some commentary around that later today at the ECB. What are you watching out for? Obviously, no interest rate cut expected after a series of interest rate cuts. What do you think could move the market coming out of today's meeting?
Well, I think ahead of that, we also have to keep an eye on how the PMIs are panning out in Europe. Are they, again, looking less bad? I mean, that would be an interesting development. But going into the ECB meeting, again, the language would be, how do they feel about, are they actually closer to this neutral rate, or do they still see downside risks to growth and inflation, in which case the market begins to pencil in the risk of another potential cut? Now, I don't think that's necessarily enough to disrupt the euro because the dollar bearish mood is still quite strong at this point. But I think the language about what they're saying about forward-looking indications on growth and inflation will matter a lot.
Yeah, you talk about the weakness of the USD, and for a while, one of the other notable currency pairs was dollar-yen. Things seem to have changed or turned in the last 24 hours with all of the news coming out there, the trade deal, the fact that people are turning perhaps a little bit more hawkish again about the Bank of Japan, and then, of course, the political developments as well. What do you see all of this meaning for the direction of travel for the yen from here?
Well, it is quite an amazing turnaround, because if you think about sentiment 1 week ago, I think market participants were quite concerned about what the election outcome could bring. And then come Monday morning, that turned out to be a distant memory, and everyone flipped their thinking quite quickly. So that's the nature of the currency market and trying to understand politics. But with that, I think that, yes, I think the runway still is that the currency is going to be poised to gradually strengthening. I think the near term is a little bit uncertain with the political backdrop, but nonetheless, I mean, our baseline view in a soft dollar world, then yes, the Japanese yen should be benefiting too.
Yeah. Do you have a target on that?
Well, our thinking is that it's going to be coming down to 140 by the end of this year. But of course, if the dollar really hits the skids in a bigger way, then we could be talking about something below that. I think most people will come to the conclusion that the Japanese yen is still very undervalued and is trying to find those opportunities to try and like it.
Yeah. Paul, always good to talk to you. Thank you so much for getting up early for us. Paul Mackel, Global Head of FX Research at HSBC. Well, we were talking about European numbers and growth figures that the markets are potentially watching out for, but also some data coming through now. European car sales have fallen 5.1% to 1.24 million vehicles. This is per the European Automobile Manufacturers Association. Consumers remaining cautious. More robust demand measures will remain a crucial element to get the transition up to speed. So the numbers disappointing, but the biggest source of volume decline coming from Germany, which is obviously the region's largest auto market. Registrations falling 14% in June in Germany. So there you go. But plug-in hybrids do remain a bright spot in the European region. All right, coming up, a 150-person Saudi Arabian delegation has arrived in Damascus as the war-ravaged country looks to revitalize its devastated economy. The details next. This is Bloomberg. A 150-person Saudi Arabian delegation consisting of business people and government officials has arrived in Syria. The Saudi-Syrian Investment Forum in Damascus is set to include the signing of 44 pacts worth about $6 billion. Joining us now is Dana Khrish, Bloomberg's UAE bureau chief. That is quite a sizable delegation, 150-person delegation being sent from Saudi Arabia to Damascus, $6 billion worth of deals potentially agreed to. Dana, what more do we know and why is this significant?
It is pretty impressive, and it's headed by Investment Minister Khalid Al-Faleh. So this is very significant, and it's a major show of support for Al-Shara himself, not just Syria, especially after the Sueda clashes, where we saw government troops, government forces actually commit crimes against the Druze and all of these sectarian fighting and fueling there, which ended last week, yet this really put Shara in a very difficult situation. So from a political perspective, I would say, the delegation arrived as per the Crown Prince's direction. So this was something that the Crown Prince is approving. It's under his sponsorship. And it means that Al-Shara still has the backing of Saudi Arabia, which wants Syria to remain out of Iran's orbit, wants to stabilize the country, because we've seen when Syria is not stable, then we'll have extremist groups like ISIS reemerge again. And that's important. It's important for Shara's survival, and it's important to stabilize Syria, and signing those contracts mean definitely a long-term investment. Now, economically, of course, Syria needs all the money it can get after years of being blocked out of financial markets, absence of any foreign investment, devastation to its infrastructure. So these contracts we saw that will be focused on things like energy, construction, civil aviation, telecoms. And we saw they've already signed the establishment of a white cement factory there as well. So industry, this is very important. And of course, also cybersecurity. And those are sectors that the Saudi businessmen and companies are looking into. Now, the summit starts today, but it's worth remembering that will Saudi Arabia be able to pour in this much money, right? It's also financially squeezed. We've seen reviewing some of its mega projects, $6 billion that was announced. That was, it's a big amount of money for someone like Saudi Arabia, especially with lower oil prices. So it remains to see whether these will be MOUs or real contracts materializing on the ground.
Dada, let's talk about the latest in Gaza as well. 25 people have died from malnutrition over the last 24 hours. The humanitarian crisis is getting worse and worse. The latest is saying that Hamas have now responded to the ceasefire and have given their response to the mediators. Do we know about what is involved? What are the details that are included in their response?
So Hamas said that they did send back their response on the ceasefire deal. Of course, that's the one that Steve Witkoff, the U.S. envoy, was involved in and drafted. He's currently in Rome, but if we see him traveling to Doha, that means very positive signal that these ceasefire negotiations are going ahead. And as you said, there's starvation and malnutrition, and that's why we saw earlier this week mass international pressure against Israel to actually go ahead and end this conflict. And we saw from media reports also late last night that Hamas's tried to kind of amend the maps where the Israeli troops will be stationed. So they're not against Israel troops being in the enclave, but they want it in specific parameters, maybe outside of Gaza rather than inside of it. And they want to see Israel withdraw from the Salahuddin axis, which is the one that separates Gaza from the north of Gaza from the south. Now, we know, and also, of course, pushes for more humanitarian aid. And Israel insists on disarming Hamas completely. We don't know what would happen on this point. We also don't know how many hostages they have agreed to release. So these questions still remain. But if we see Steve Witkoff going to Doha to meet officials there, then that's a very good sign.
Dana, thank you so much for the overview. Dana Khresh, Bloomberg's UAE Bureau Chief. And still ahead, we'll take a closer look at Tesla, which is warning of a rough few quarters ahead. This is Bloomberg. European Commission President Ursula von der Leyen says rebalancing ties with China is not optional and relations are at an inflection point. That says Chinese President Xi Jinping urges stronger communication and mutual trust between the two, as reported by state broadcaster CCTV. Xi met with the EU leaders in Beijing today in the first in-person summit since 2023. Lots to be discussed there, including some of those trading arrangements as it pertains to the rare earth exports to the EU, one of those sticking points in the discussions between the two sides. All right, let's take a quick look at equity futures as we head into the European Open. European markets are seen opening up 1.2%. S&P and NASDAQ also in the green. Markets there digesting some of the results that came through from Alphabet and Tesla. We'll talk more about that. But we're also going to be talking about ADIB, which is one of the local banks. Second quarter profit jumped 13% year on year. We'll speak to the group CEO next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. New floor. U.S. President Donald Trump says trading partners will face tariff rates between 15 and 50%. It comes as the European Union sees progress towards an agreement. Bumpy ride. Tesla CEO Elon Musk warns of a few rough quarters ahead as tariff costs increase and bite into demand. Second quarter revenue saw its sharpest drop in a decade. And we speak to Mohamed Abdelbary, this group CEO of Abu Dhabi Islamic Bank, after the bank reported a 13% year-on-year jump in its second quarter profits. It has just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. Another positive day for global equities as we speak to the rally in Asia Pacific. That is continuing overnight. Sixth day in a row of gains for that index. And S&P this morning leaning towards the green, but of course coming off those all-time record highs. So what happens is in the morning, late morning, as New York come in, we start seeing a build-up in momentum. But a big focus on earnings this week. We are today talking about the impact of some of those Alphabet and Tesla earnings that hit last night. Alphabet on the stronger side, Tesla a bit of a disappointment to the market. We'll be speaking to Danny Lee shortly. European indices pointed to open up in the green. Some positivity there about the possibility of an EU-US trade deal before August the 1st. The euro also inching higher ahead of that ECB meeting today. No rate cut expected, but still the market will be looking for some clues on how the ECB see the path ahead, both on growth and on inflation dynamics. So without certainty uncertainty on the trade deal is perhaps a little bit difficult for them to navigate. And then you've got dollar yen. We've broken through 146 this morning to the downside. Money going into the Japanese currency. We are 0.3% firmer versus the USD. That momentum picking up in the last 24 hours. Switching over. You will see it is not only advanced economies that are doing well in this risk-on rally, it's also emerging market economies too. This is the MSCI Emerging Markets Index. It is up 18% this year and at levels not seen since 2021. So it is a global equities rally. All right, let's check in on Chinese markets as well today. Avril Hong is in our Singapore studio. Avril, break it down for us.
Yeah, we've been talking so much about Japan, so I thought I'd just shine the spotlight on what we're seeing in Chinese stocks that have also marked a really remarkable rebound from the April lows. And you're looking at the Hang Seng China Index that just a day ago hit a 4-year high, extending the climb today as well. A couple of things that are underpinning the declines, or the gains, I should say, including the easing of US-China tensions. Remember, the officials from both sides meet next week in Stockholm. You also have domestically authorities taking pains to address issues such as intense competition, price wars, access capacity, and the likes of Morgan Stanley this week highlighting how pre-earnings announcements have been sounding a bit more positive. We'll of course be watching out for the Politburo later this month that will set the tone for the back half of the year. Amid all this, also just highlighting when it comes to the offshore renminbi, we've seen it at the strongest level against the greenback since November after a fix on dollar yuan that was the lowest level since November last year. So overall looking positive for Chinese assets. Jumana.
Avril, thank you so much. Avril Hong in Singapore. Let's turn to domestic earnings. Abu Dhabi Islamic Bank has reported second quarter profits of 1.78 billion dirhams. That is a jump of 13% year on year. The lender also had a strong first half with net income climbing 15% in comparison to 2024. Mohamed Abdelbary, the group CEO of ADIB, joins us right now. The last time we spoke was the full year of 2024.
Indeed.
And I remember we were doing a bit of a preview about how this year was going to go. Yeah. Results seem to be pretty solid. What is driving the performance? Is it asset growth or is it financing growth?
Thanks so much, Joanna. And we have been very happy with the first 6 months of performance. And if I can just break it down into a few pillars. So financing growth has been very strong. We've seen almost 22% year-on-year growth, supported by a very efficient funding mix. So also our CASA growth has been good, which is very important for net profit margins. On the other side, operation efficiency has been good. So cost-to-income ratio at 28.2%. All that is supported by very strong client momentum as well. So I think overall, it's been a very strong 6 months for us.
What is the outlook for lending activity and for financing growth into the second half of the year? Do you expect that momentum to continue?
I would say yes. So year to date, we are almost 14% up since December. Pipeline is very strong. And I always say the client sentiment is very important for us. So what we are seeing, particularly in the retail space, very strong momentum, particularly on the home finance, personal finance side. So I'm cautiously optimistic that the second half of the year will be as strong as the first half as well.
Yeah. And is there a particular part of the market that's growing more strongly than others? Is it coming through on the personal side or the corporate side?
So the good thing is actually both sides have done extremely well. So on we've actually seen almost 22% year on year on both sides, retail and corporate. It's slightly different dynamic because on the corporate side, we're seeing more on the corporate side, less so on the government entities because liquidity is there, which is also good for margins. But on retail side, it's a very diversified mix. Home finance, personal finance, auto, all segments. It's been really a very fantastic ride for us.
Interesting. Some of your competitors have been making a big push into Saudi Arabia and to lending into that market. How much of an opportunity do you see there as well?
So Saudi is a very strategic market for us as well. It's very unique in terms of its Vision 2030. So we are playing in that field as well. We have a decent exposure into the Saudi market, focusing mainly on project finance and strategic alignments. So if I just give you a percentage, almost 10 to 15% of our book is currently exposed to Saudi market as well.
Yeah. And do you sense that there is a greater need for funding and for lending into the kingdom because of the macro situation over there?
I think if you look at all the strategic projects they have lined up, there's definitely need today and in the future for financing these projects as well. There are projects which are in line with our risk appetite and our strategy, so we're very happy to participate in these as well.
Yeah. Talk to me about impairments. Also notable, I see your second quarter impairments were down 32%. How do you see that evolving into the second half of the year, also as it pertains to your cost of risk as well?
Yeah, so our cost of risk is approximately 50 basis points, has been at that level for some time. The good thing is that we have not changed any of our risk appetite, so we're originating assets within the bank strategy. So obviously bearing any left field phenomena, I think that will probably continue in the foreseeable future as well.
Yeah, maybe a macro question for you. Have you been surprised that the resilience of the local economy, given how turbulent the global economy has been for the first few months of this year?
Well, not at all. If I look back in history, right, so we've always seen turbulence at the global landscape, and what has happened in the local market is that it's actually responded positively to that. If I would just ask myself why that is, probably the GDP, 70% is now non-oil driven, so a lot of other sectors are contributing. A very investor-friendly environment, it's a safe haven. And even in the first 6 months or second quarter of the year, where the turbulence has been at its highest, I would say, probably one of our best quarters in the market.
Was there any impact to, well, the bank, not just the bank itself, but sort of sentiment around the geopolitical flaring up of tensions that kicked off back in June, the war between Iran and Israel? Did that have a notable impact?
So I think when it started, we've seen some pause, I would say. People are cautious. They looked at, like any uncertainty, what's going to happen. But this didn't last too long. And immediately the business resumed as usual again. Yeah.
What is your outlook for interest rates at this point?
So I think it's a good question, because that's moved from quite a lot of numbers to now probably 2 cuts now. That's the latest view of the market. We probably share that view, maybe October and December. 25 bips each, so probably we'll land with 50 basis points lower than where we are today.
And what does that do to your overall net interest income, net interest margins?
So today our net profit margins at 4.27%. Probably this 50 basis points will not have an immediate impact, because our balance sheet is quite geared towards that from even last year. So in next year, every 50 basis points is probably a 120 million dirham impact. But this year, I think it's going to be no impact at all, I think.
Yeah. And I also want to ask you about the outlook for M&A and whether you have had further thoughts about the ways of expanding in that area.
So we've always looked at M&A, and the reason is that because we can. So if I just look at our share price, like doubling it in 12 months, growing 70% since Jan. So it gives us a lot of optionality. Does it mean that we would rush into anything which does not make sense for us? No. At the moment, we're not looking at anything specifically, but anything which will be capital accretive to us will be definitely looked at.
Yeah, and just finally, just give us a snapshot of how your Egypt business is doing right now.
Egypt business is doing fantastically well, right? So they haven't announced their numbers yet, so I cannot disclose.
Right.
But for the first quarter, I can tell you is that they have grown in double digits. Their return on equity is in the mid-30s%. So on a local level, they have done fantastically well. Now, the currency is an issue, of course, because when you translate it back into dirham, there is an impact. But on a local perspective, a very strong and resilient business for us.
Sir, thank you so much for coming on and for fielding our questions. Mohamed Abdelbary, the Group CEO of Abu Dhabi Islamic Bank. And Tesla CEO Elon Musk warned of a few rough quarters ahead as tariff costs increase and bite into demand. That's after second quarter sales plunged 12%, the worst drop in at least a decade.
We probably could have a few rough quarters. I'm not saying we will, but we could. Q4, Q1, maybe Q2. But once you get to autonomy at scale in the second half of next year, certainly by the end of next year, I think I would be surprised if Tesla's economics are not very compelling.
Asia Transport reporter Danny Lee is with us now. Danny, so Elon Musk does not seem that upbeat about the next quarters ahead. Why is he so downbeat, and where are some of the headwinds coming from?
Well, you can hear just in the earnings call how downbeat he was in his voice. You know, there is the geopolitical headwinds, the tariff headwinds that they're facing. But even for Tesla, just the the kind of product lineup and the pivot from being just an EV company to trying to sell this message of being autonomous, AI related, having this drive in robotics and robots as well. So, and that's the tough transition that Musk warned that it's not going to be an easy kind of switch. As you know, in the second quarter earnings period, it was the EV business that kind of dragged the company down. And of course, when you look at the EV sales that Tesla has been building up, it's been falling quarter on the quarter. So we haven't seen much in terms of that, the year-end guidance. And I think that's a struggle for the company to try and have visibility as it goes through this kind of tough transition period.
You know, there was one line in the BN article that was up this morning saying on the conference call, executives spent relatively little time discussing EV deliveries, spending portions instead talking about a planned expansion of the robotaxi service and its new Tesla diner. I don't know if I'm going to ask you about the Tesla diner because I'm just going to leave it to viewers themselves to go and check it out. It's quite strange. But how is Elon Musk positioning the company from a growth perspective, if not on an EV front? Where is the growth going to come from?
Well, this is the thing. This is where Elon Musk really has to focus on the priorities. It's all well and good having the kind of window dressing of a Tesla diner, but they've still got to roll out towards the end of this year a more affordable EV that is going to be critical in trying to put a floor under its falling sales. So that may help in the short term. And then to the back end of next year, they're going to have a more of an autonomous focused car, particularly around expanding its robotaxi service, which they've rolled out initially in one city in Austin, but they want to roll out to many more cities, and particularly around the world. But this is clearly a challenge. That these are things that are not going to come quickly, and therefore investors will likely need to have patience as more details drip feed over the coming quarters.
Asia transport reporter Danny Lee, thank you so much. And for the viewers watching, those images, or the images of that Tesla diner that I just referenced, where you can go and get served popcorn by a robot if you're into that sort of thing. All right, coming up, traders and economists expect the European Central Bank to keep rates unchanged. We're live in Frankfurt with a preview next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joumana Bersachi in Dubai. Turkey's central bank is expected to make its first interest rate cut today since a political crisis in March. The bank has been wary of a potential currency slide since the jailing of President Erdogan's opponent, Istanbul Mayor Ekrem İmamoğlu, triggered a meltdown in Turkish assets. Annual inflation in June slowed to 35.1%, with the central bank targeting 24% at the end of the year. And the European Central Bank is set to leave interest rates untouched at 2% for the first time in more than a year as it awaits clarity on what President Trump's tariffs will do to inflation. Bloomberg's Lizzie Burden is outside the ECB headquarters in Frankfurt. So we've had consecutive cuts. I think it was 6 in a row out of the ECB. They're not slated to do anything today. So what should we be watching out for, Lizzie?
Well, Joumana, I can't promise you the action of Turkey because all but 2 economists, as you say, in our survey see a hold from the ECB today. And that's because by September, hopefully they'll have more clarity on trade, more data, and those all-important updated forecasts as well. But whether or not Brussels and Washington can reach a trade deal, and our reporting suggests that they are nearly there on a 15% deal following in the footsteps of Japan, could be the deciding factor of whether today marks the start of a pause for the ECB or the end of cuts for the ECB. Now, if you look at the analysis by Berenberg and RBC, they say a 15% deal could mean the end. But our economists at Bloomberg Economics, Joumana, say that actually 15% is higher than the 10% that was in the June forecast of the ECB. That meant that there would still be another cut in September. And our economists say you've still got to layer on top of that the sectoral tariffs. So even with a 15% deal, they say cuts in September and December to come. So I expect that Lagarde is going to keep her cards very close to her chest today. I'll be interested what she says on the euro. Luis de Guindos, the Vice President, telling us at Sintra that 120 is the level that complicates matters for the ECB. I wouldn't expect her to be as precise as that when she's trying to call for a greater role for the euro on the global stage. But any hints about downside risks to growth, this market is going to latch onto as hints that the September meeting is live.
Yeah, the euro point is a good one, especially as we inch back towards that 120 mark. 118-ish is where we are right now. And with inflation already at target, you've got to think that perhaps it could pose some deflationary pressure. Lizzie, great coverage as always. Thank you so much, Lizzie Burden, outside the ECB. Not for long. She's going inside shortly. All right, now for a look at some other stories we're following. Iran has reportedly agreed to allow a technical team from the International Atomic Energy Agency to visit the country in the coming weeks. That is according to a Reuters report citing an Iranian deputy foreign minister. The report added the team will discuss a new modality on their relationship and will not visit Iran's nuclear sites. Meanwhile, Tehran says it has not ruled out withdrawing from the Treaty on the Non-Proliferation of Nuclear Weapons, that's the NPT, if the United Nations were to reimpose sanctions. Negotiators from Russia and Ukraine have ended their latest round of formal talks in Istanbul with an agreement to swap more prisoners, but little progress on a peace deal. The two sides agreed to a new exchange of about 1,200 prisoners, but Russia dismissed Ukraine's proposal for a summit in August, including President Trump, saying a peace deal must be agreed to first. And coming up, Canal Plus is set to become Africa's largest pay TV and streaming business after receiving antitrust approval by MultiChoice Group. We'll get you the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. South Africa's coalition government has narrowly avoided another crisis, with Parliament passing the national budget after days of political tension. The Democratic Alliance had threatened to withhold support for allocations to departments headed by ministers implicated in wrongdoing, but they backed down after President Ramaphosa fired his higher education minister. The budget now heads to the National Council of Provinces next week for final approval. Canal Plus is set to become Africa's largest pay TV and streaming business after winning South African antitrust approval to buy MultiChoice Group. Bloomberg reporter Lonnie Prinsloo joins us from Johannesburg. Okay, well, talk us through the next steps for Canal Plus. What do they need to do to get this deal over the finish line?
Thanks, Jumana. So next up, they have to sort of decide on the structure of this and to comply with some South African regulations. There is an ask of them to do a secondary listing on the Johannesburg Stock Exchange. So they have to prep for that in the next 9 months. That needs to happen. And then also in terms of local ownership, they have to do a black empowerment deal. So yeah, quite a bit more for them just to get this over the line and to make the biggest sort of African pay TV and streaming service.
Yeah, I mean, why does a deal of this magnitude make sense for Canal Plus to begin with? So,
MultiChoice, which is what Canal Plus is currently buying, was started in 1985 in South Africa and became the biggest pay TV subscription business that we have. In terms of just the demographics of Africa currently, it's the fastest growing and the youngest population in the world. So if you look at that demographics, the fact that youth influences things like culture and entertainment, a deal like this definitely does make sense for Canal Plus.
Do we know what the size of the eventual combined entity is going to look like, or is it too early to say?
So we have a good idea. There's, as we said, MultiChoice has a sizable footprint, especially in sub-Saharan Africa. Canal Plus has a nice footprint across Francophone Africa. So that will give you a footprint in more than 30 African countries out of about 50, plus 50 million users. So that, as a starting point, is quite significant.
Yeah, it seems like it. Lonnie Prinsloo with big corporate news from South Africa. Thank you so much for joining us. Well, some sports news. Qatar has confirmed it will bid for the 2036 Summer Olympics. If successful, it will be the first Middle Eastern nation to host one of the world's biggest sporting events. Qatar says it's well positioned to hold the event in its capital, Doha, as 95% of the required sports infrastructure is already in place. Now, bidding is likely to be competitive, with Turkey, India, Indonesia, and Chile also putting themselves forwards as hosts. Is something to think about for 2036. That feels a really long time away. So let's talk about what's happening today and take a look at equity markets. This is the picture for some of these key equity indices around the world. You can see it is a picture of green for the most part. S&P futures leaning towards a positive session today, up 7 basis points. NASDAQ also up 0.3%. No doubt boosted by strong after-hours earnings from Alphabet, though Tesla and both IBM and Tesla actually disappointing in terms of after-hours performance. European markets, you can see solid open, cited ahead 1.2% is where futures are trading right now. We've got the ECB meeting coming up later today. We'll be watching out for anything they say about the European growth outlook, in addition to inflation, with the euro currency trading strong versus the USD. That could pose some deflationary pressure on the economy as we head into that August 1st deadline and the possibility of an EU-US trade deal. But that is it for Horizons Middle East and Africa. I'm Johanna Versace in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.